still at the globe. Join you.
The committee will come to order. I note that a quorum shall be present. Without objection, the committee is authorized to declare a recess of the committee at any time. Without objection, members of the full committee not on this subcommittee are authorized to participate in today's hearing. The committee is meeting today pursuant to notice to hear testimony on examining racial and gender wealth gap in America. I now recognize myself for 4 minutes to give an opening statement. Today's hearing is centered around a critical mission of why this subcommittee exists. The racial and gender wealth gap is real, unacceptable, and actually much larger than people think. True wealth can be defined by adding up total assets, including cash, retirement accounts, or your home, and then subtracting liabilities, such as credit card debt, student loans, mortgage, to reach your net worth. But according to the United States Census Bureau, the median net worth of white households was $130,800. The median net worth of Latina households was $17,530, and for Black households, it was $9,590. For nearly all working families, the most powerful wealth-building tools are home ownership and retirement savings. However, due to structural racism, redlining practices, outright discrimination, disparities, and the list goes on, along with predatory lending practices that disproportionately affect women and communities of color, it has been more difficult for certain families to actually build wealth across multiple generations. There's always talk about disparities in income between women and people of color as compared to their white peers, but social economic differences do not explain away racial inequities. Today's reality, in which the home ownership rate for Black households today is the same as it was in 1967, when race-based discrimination in housing was legal and did not happen by accident. And we've heard all of those stories. Racial and gender inequities are not caused by individual behavior, but steeped in systems and policies that perpetuate past injustices. This subcommittee was founded to help leaders and members of Congress confront the reality that our systems, our institutions, and outcomes emanate from an unjust hierarchy of which the United States was built. According to Richard Rothstein, who authored The Color of the Law, he states, quote, "We have created a caste system in this country with African Americans kept exploited and geographically separated by racial explicit government policies. And although most of these policies are now off the books, they have never been remedied, and their effect endure." So for that reason, I am proud to have today's hearing to help identify an underlying issue that perpetuates the racial and gender wealth divide and help set up the stage for bold, comprehensive solutions to this pressing promise facing the nation. Barriers to wealth accumulation remains a growing issue facing our communities. In particular, my constituents in the 3rd Congressional District of Ohio and the nation at large. There is no one size that fits all, and I call on my colleagues within this committee to give this topic the full attention it deserves and work together to implement multifaceted federal policy solutions. And I reserve the balance of my time for the chair of the Financial Services Subcommittee, Chairwoman Maxine Waters. The chair now recognizes the ranking member, Congresswoman Ann Wagner, for her full 5 minutes for her opening statement.
I thank the chair. Madam Chair, thank you so much for putting together this hearing today. It's a critical hearing as we direct congressional efforts toward addressing the racial and gender pay and wealth gaps. In 1976, 1 in 20 women were the sole breadwinners in their households. By 2013, it was 1 in 4. And today, women are the breadwinner or co-breadwinner in nearly 2/3 of families with children. Given these substantial gains in the percentage of women participating in the workforce and growing our economy, we must ensure that women have equal access to opportunities to support their families, save for the future, and build assets. The good news is that we have seen a tremendous improvement in how women are compensated in the past few decades. A 2018 pay scale study, which I would ask, Madam Chair, that we submit for the record.
Without objection.
Comparing men and women with similar experience, industry, and job level, found that women actually receive 98 cents for every dollar earned by men. This is fantastic progress. But there is still much to be done, particularly in addressing the wealth gap and the managers gap, and ensuring that the American workforce is more flexible and family-friendly so that mothers can participate without facing unnecessary hurdles or sacrificing the well-being of their children, America's next generation. As a working woman, I worked before, during, and after I had my children and grandchildren. I have always been a passionate defender of equal pay for equal work. And in order to close the pay gap and empower more women and people of color to be leaders in our workforce, I am proud co-sponsor of H.R. 1925, the Wage Equity Act. This legislation would empower employees to utilize flexible work arrangements, create proactively incentivize businesses to fix pay disparities, protect individuals in negotiating employment based upon merit, not salary history, target negotiation education for women, and protect employees in discussing their compensation with their colleagues. In 2017, the Government Accountability Office, GAO, found that women are underrepresented in the financial services industry, especially in management. In this industry, mathematicians, engineers, and physicists work alongside financiers and economists. But women receive far fewer degrees in math, statistics, computer science, and engineering compared to men. The underrepresentation of women and minorities in well-paid STEM careers is one of the underlying causes of the wealth gap. Creating greater diversity in STEM education and doing it at an early age is critical, not only for improving opportunities for women and minorities in finance, but across all workforce sectors. It is key to sustaining robust economic growth in the United States. That is why I sent a letter yesterday to the GAO, which I would like again to submit for the record, Madam Chair.
Without objection.
Requesting a study to assess how firms are supporting increased participation among women in STEM programs at the secondary, undergraduate, and graduate levels, and what best practices firms are using to recruit and retain women with STEM degrees. This study will help us continue to find solutions as we strengthen the U.S. financial services industry. I thank you, and I will now yield the remainder of my time to the ranking member of the Financial Services Committee, Mr. Patrick McHenry from North Carolina.
Well, I thank the ranking member, and I thank the chairwoman for holding this subcommittee meeting. Look, this subcommittee's principle is pretty simple. Every American should have full and equal access to the same economic opportunities. The data indicating there are gender and racial wealth gaps tells us that that is not the case. Financial firms and other companies of all types have recognized the negative consequences of the wealth gaps in this country. Firms are taking proactive steps to address the underlying conditions resulting in women and minorities to earn less and thus save less. Initiatives such as the financial literacy training, changes to family leave and child care policies, that I've been supportive of. And pushes for higher participation in STEM programs have been effective. We need to do more. So thank you for your participation. Thank you for your initiatives, and we look forward to a good hearing.
Thank you. Today, we welcome the testimony of a very diverse and distinguished panel of 5 witnesses. Thank you. First, we welcome the testimony of Diedrich Asante Mohammed, the Chief of Race, Wealth, and Community at the National Community Reinvestment Coalition. He oversees the NCRC's Fair Housing, Fair Lending, and Small Business programs. Mr. Asante Mohammed oversees their small business program as well. Prior to his role, he was the Senior Director of the Economic Department and Executive Director of the Financial Freedom Center. Next, we welcome the testimony of Kijay Kazi, who is the Institute Fellow at the Urban Institute. Ms. Kijay Kazi, closer, research is focused on economic security, structural racism, and the racial wealth gap. Her publications include African American economic development and small business ownership. She is an advisor for the Closing the Women's Wealth Gap Initiative and was a member of the Bipartisan Commission on Retirement Security and Personal Saving. We next welcome the testimony of Dr. Mariko Powell, a researcher and independent consultant specializing in external evaluation of grants that seek to increase faculty diversity and bring underrepresented groups into STEM, science, technology, engineering, and mathematics. Dr. Powell is a national expert on the wealth gap, especially gender and racial dimensions of wealth inequality. She is also a founding member of the Closing Women's Wealth Gap Initiative and a member of the Insights Center's Experts of Color Network. Next, we welcome the testimony of Sally Krawcheck, who is the chair of the Elevate Network, a 135,000-strong global professional women's network. Ms. Krawcheck is the CEO and co-founder of Elevate, a digitally first mission-driven investment platform for women. Before launching Elevate, Ms. Krawcheck built a successful center as the CEO of Merrill Lynch, Smith Barney, U.S. Trust, Citi Private Bank, and Stanford C. Bernstein. She was also Chief Financial Officer for Citigroup. Finally, we welcome the testimony of Dr. Lisa Cook, an associate professor in the Department of Economics at the Jane Madison College at Michigan State University. She served as president of the National Economic Association from 2015 to 2016 and currently serves as co-director of the American Economic Association Summer Training Program. Prior to this academic appointment and while on faculty at Harvard University's Kennedy School of Government, she was also the deputy director for African Research and Programs at the Center for International Development at Harvard University. Wow. The witnesses are reminded that their oral testimony will be limited to 5 minutes. Without objection, your written statement will be part of the record. The witnesses are reminded to turn on their microphones and abide by the 3 lights in front of you. Green means go, yellow means wrap up, and red means stop. We're going to first start with Ms. Kijay Kazi, and you are now recognized for 5 minutes to give an oral presentation of your testimony.
Chairwoman Beatty, Ranking Member Wagner, and members of the subcommittee, thank you for inviting me to testify today. The views expressed are my own and should not be attributed to the Urban Institute, its trustees, or its funders. This hearing represents a critical step in work that has been done to bring the racial and gender wealth gaps to national attention. My remarks will focus on 3 key points. First, the racial wealth gap is not the result of bad financial choices by people of color. It was created through structural racism. Second, to understand and effectively address the racial wealth gap, we need more expansive data collection that is federally funded. Third, the gap can be closed, but it will require bold, equitable solutions that focus on policy change, not changing people's behavior. The racial wealth gap is the difference in net worth between families of color and white families. The median wealth of white families in 2016 was 10 times the wealth of Black families and 8 times the wealth of Latinx families. Research demonstrates that the racial wealth gap was created by policies, programs, and institutional practices designed to facilitate the wealth accumulation by white families while impeding wealth building by or stripping wealth from families of color. These policies include human trafficking and bondage of people of African descent to build wealth for white people, followed by policies that restricted Black home and business ownership, employment, and educational opportunities. Latinx families experience extensive land loss, especially during the Manifest Destiny period, and displacement through deportation thereafter. Native Americans lost much of their land and natural resources through wars, treaties, and forced displacement, including through the Homestead Act. Asian Americans faced special fees, taxes, and regulations that made them less competitive with white people, and Japanese Americans were interned during World War II, losing their freedom and their assets. It was not until 1900 that all states passed legislation allowing women to control their property, and codified labor market discrimination existed into the 1970s. More recently, families of color were targeted for subprime mortgages, even when they qualified for prime loans, resulting in a loss of home ownership and equity. The racial wealth gap persists even when Black families make all of the, quote, right, end quote, choices. Black people with college degrees have less wealth than white high school dropouts. Black people who work full-time have less wealth than unemployed white people. Two-parent Black families have less wealth than single-parent white families. The Ford Foundation funded the first research that was specifically designed to measure the racial wealth gap and to disaggregate the data not only by race and ethnicity, but also by country of origin and tribal affiliation. But the study was limited to 5 cities and for 1 year. We need federally funded data collected periodically to better understand the drivers of the racial and gender wealth gaps and to inform policymakers. A possible solution is to expand the Federal Reserve Board's survey of consumer finance. The racial and gender wealth gaps are not unsolvable problems, but they require bold, equitable policy solutions to eliminate them. Baby bonds are a bold solution proposed by Derek Hamilton that would give all newborns a publicly funded endowment ranging from $500 to $60,000 based on the family's wealth. These bonds would be held by the federal government until the child becomes a young adult and can use them to pay for an asset like higher education or a home. One analysis showed that baby bonds nearly closed the racial wealth gap. The cost of baby bonds could be covered by a more equitable use of existing tax expenditures for asset building. Over 70% of tax expenditures intended to help families build wealth go to the top 20% of income earners. A more equitable use of these tax subsidies would cover the cost of baby bonds. So in summary, wealth gaps are caused by discriminatory policies and practices. Thank you.
Thank you so much, Ms. Kijay Kazi. And now I would like to recognize Mr. Ashante Mohammed for 5 minutes.
Good afternoon, and thank you for inviting me here as Chief of Race, Wealth, and Community of the National Community Reinvestment Coalition to speak about the racial wealth divide and what must be done to address this critical issue. NCRC was formed in 1990 and has grown into an association of more than 600 community-based organizations that promote access to essential banking services, affordable housing, entrepreneurship, job creation, and vibrant communities for America's working families. Thanks to the groundbreaking work of colleagues like Dr. Kilolo Kijakazi and Dr. Mariko Chang Piley, there is growing recognition of the ongoing challenge of a deep and too often growing racial wealth divide. As I often state, the foundation of racial inequality is racial economic inequality, and the foundation of racial economic inequality is racial wealth inequality. As the country's demographics continue to change, the racial wealth divide is no longer primarily a challenge of disenfranchised minorities, but rather a threat to the American middle class. As the report Dreams Deferred notes, since the early 1980s, median wealth among Black and Latino families have been stuck at less than $10,000, while white household median wealth grew from about $105,000 to $140,000. In spite of the growth of white wealth, national median wealth has slightly declined from about $84,000 to $82,000, showing how the racial wealth divide is weakening the American middle class as a whole. Similar to the racial wealth divide, there has been ongoing racial inequality for the two largest assets in Americans' wealth portfolio: business ownership and home ownership. For the last 40 years, Black and Latino home ownership rates have stayed below 50%, while white home ownership has remained at about 70%. In the second quarter of 2019, whites had a home ownership rate of 73%, with Latino home ownership at almost 47% and Black home ownership near 41%. In regards to business ownership, although 13% of the U.S. population is Black, only 10% of African Americans are business owners, and only 2% of businesses with employees are Black-owned. Hispanics are 17% of the population, but own only 6% of small businesses with employees. As was done to jumpstart the white American middle class, significant investment capital must be invested to build African American, Latino, and Native American wealth. The report, 10 Solutions to Bridge the Racial Wealth Divide, reviews bold proposals to bridge racial economic inequality as a whole and the racial wealth divide in particular. This report was a collaboration between NCRC, the Kieran Institute of the Study of Race and Ethnicity of Ohio State University, and the Inequality Project of the Institute for Policy Studies. These proposals include baby bonds, as was previously mentioned, similar to those in Senator Cory Booker's 2018 bill titled the American Opportunity Accounts Act. We also proposed a significant investment into affordable housing and home ownership, exemplified in Senator Elizabeth Warren's American Housing and Economic Mobility Act and Senator Bernie Sanders' Housing for All plan. Our paper also promotes the passage of H.R. 40 to establish a commission to study and develop reparation proposals for African Americans. Finally, improving data collection on race and wealth is another proposed solution. NCRC strongly advocates for improving data collection in regards to the racial wealth divide, such as the full implementation of Section 1071 of the Dodd-Frank Act, which would require the CFPB to collect and disclose better data on loans made to minority, women-owned, and small businesses. Similarly, NCRC advocates for the provisions of the previously mentioned American Housing and Economic Mobility Act that requires banks be examined where they're making a significant amount of retail loans outside the geographical area of bank branches and leveling the playing field for financial institutions by requiring non-banks be examined under the CRA. Bold policy proposals are needed to address the national crisis of racial wealth inequality, and we thank the House Finance Subcommittee on Diversity and Inclusion to discuss these necessary reforms.
Thank you very much. Ms. Powell, you are now recognized for 5 minutes to give an oral presentation on your testimony.
Chairwoman Beatty, Ranking Member Wagner, and members of the subcommittee, my name is Mariko Chang Pyle, and I'm a former associate professor of sociology at Harvard University and currently the president of Mariko Chang Consulting. I appreciate the opportunity to testify about the women's wealth gap. But the women's wealth gap not only impacts women, It affects men, families, and especially children. 2/3 of mothers are the family breadwinners or co-breadwinners. About 1/4 of children under age 18 live in a single mother family. More than ever before, the economic security of families rests on women's shoulders. Data from the 2013 Survey of Consumer Finances provided by the Federal Reserve Board revealed a significant wealth gap between single men and women during their prime working ages of ages 18 to 64. Single men, those who had never been married or were divorced or widowed, had a median wealth of $10,150. In comparison, single women owned $3,210. Expressed as a proportion, single women had 32 cents for every dollar of wealth owned by single men. These gaps remain when we take into consideration other factors that impact wealth, such as age, income, and level of education. And the wealth gap is magnified for women of color. Single Black women of prime working age have a median wealth of $200, and for single Hispanic women, it's $100, which amounts to less than a penny of wealth for every dollar owned by their single white non-Hispanic male counterparts. Women of all races also experience a motherhood wealth penalty, with mothers possessing only 20% as much wealth as fathers. Again, this penalty is much greater for women of color. Black and Hispanic women with children under age 18 have a median wealth of $0 and $50, respectively. In contrast, single white men who are fathers have a median wealth of more than $41,000. While wages no doubt contribute to wealth building, they are not the sole determinant. To illustrate, never married women working full-time have almost closed the wage gap, but they have only about 1/3 as much wealth as never married men. Closing the wage gap is insufficient for closing the wealth gap for 2 reasons. The first reason is that women bear a negative economic cost of parenthood. Mothers experience a wage penalty, and women are more likely to be single parents, supporting more people on a single income, and 2 or more cannot live as cheaply as 1. The second reason is that women lack full access to what I've termed the wealth escalator. The wealth escalator is made up of mechanisms built into our current systems that help people turn their incomes into wealth more quickly. The wealth escalator consists of government benefits, such as Social Security, employer-related fringe benefits, such as paid sick days and contributions to retirement plans, and tax breaks that help people retain wealth. Women, and especially women of color, lack full access to the wealth escalator because of the types of jobs they have, because they engage in caregiving, and because they have lower incomes. Women are also carrying more debt, which further restricts their ability to build wealth. Differential access to the wealth escalator cements other inequities into place, magnifying the impact of the wage gap, the motherhood wealth penalty, and for women of color, the racial wealth gap. To reduce the wealth gap, we need to focus on pay equity, but we must also expand access to the wealth escalator so it's more accessible to those with lower incomes, and so caregivers are not penalized. I'll give 3 examples of ways this can be done. First, Social Security reforms could incorporate caregiver credits, so the years spent out of the labor market or working part-time for caregiving do not lower average retirement benefits. Second, access to paid family and medical leave is essential. Third, if asset limits to qualify for public benefits are raised, or if certain types of assets, such as vehicles, are excluded from limits, these assets can help low-income women get back on their feet in times of temporary need, rather than becoming an additional barrier to building wealth. In summary, reducing the women's wealth gap is not only about addressing the wage gap, it requires a more comprehensive approach. Doing so is not only good for women, but it's essential for improving the well-being of children, families, and our nation. I appreciate and welcome your questions.
Thank you very much. Ms. Krawcheck, you are now recognized for 5 minutes to give an oral testimony of your presentation.
Thank you, and good afternoon, everyone. Madam Chairwoman, ranking members, and members of the committee, thank you for the invitation to testify on the state of the gender wealth divide in America today. My passion for this topic was a result of a recognition a few years ago that the retirement savings gap, the retirement savings crisis in this country, can be looked at through the lens of gender. Women today live 6 to 8 years longer than men. 75% plus of women die single, and women retire with 2/3 the money of men, less for women of color. The wealth gap, as noted by this panel, is a result of many things: the gender and racial pay gap, the pink tax, the debt gap, the promotion gap, the domestic work gap, among others. And I would add another one to it, and to your wealth escalator, which is the gender investing gap, in which women today keep 71 cents out of every dollar of their wealth in cash, more than men do, rather than invest it. Now, there are many structural reasons for this, and there's much data showing this. I'd like to address a couple of issues that aren't typically addressed in terms of the investment gap and the money gaps. The first, in our society today, boys and girls receive different messages about money. They receive them from childhood through adulthood. And so we, the genders, internalize different beliefs about and approaches to money. Research shows that young boys in our households today are told to go out and earn money, become a CEO. They're taught to invest, they see dad invest. And girls are taught to be careful, clip coupons, and save. Boys today receive higher allowances for the same chores as girls, and boys today receive higher grades in math for the same answers as girls. Later in life, as girls grow into young women, we tend to be patronized about money. Articles in women's magazines explain to us why budgeting is hard. Websites tell us to take the quiz to see your money type, and entire books are written that guilt women into giving up the latte with the off-basis premise that giving up these small luxuries will be the key to her financial security. In contrast, young men are told to dare and grow their money. So we women tend to, over the course of our lives, internalize that we're bad with money. In fact, it is today an attractive feminine characteristic in our society to be bad with money as a female. Is it any wonder then that we're less confident, and that money today for women is associated with loneliness and stress and isolation, not with power and independence? The second issue relates to the representation of females in the money industry. In my old industry, in the industry in which I spent more than 2.5 decades on, in Wall Street. Today, 86% of financial advisors are men, overwhelmingly white men. 90% of Wall Street traders are men, 90% of mutual fund managers are men, and 98% of mutual fund assets are managed by men. This despite the fact that the research tells us that women are as good or better money managers than men are. But lest one miss the point, the industry symbol of Wall Street is a bull. A big, snorting, angry, anatomically correct, hypermasculine bull. And it isn't getting any better. Instead, the industry, the diversity actually went backwards after the financial crisis. Again, even though research shows that women are as good or better investors, and even though the research points clearly to the superior performance of companies with diverse leadership teams. And by superior performance, that includes lowering risk, which is something I think would be important for all of us to have done for Wall Street. Given the skew in the industry that serves us all, in the money industry, it should perhaps be no surprise that women today invest less than men do. This gender wealth gap is important and has a ripple effects. For example, the power and equity that allows the harassment of the Me Too movement is also a money inequity. I like to say that the amount of money that women historically could have earned from investing is a no more Me Too money, get your hand off my leg money. And so getting more money in the hands of women and others is why we founded Elevest. We built an investing algorithm that works to remove gender bias by adjusting for the fact that women live longer and our salaries peak sooner. And we work to be as accessible as possible, having very low investing minimums to make it accessible for more people. And we're among the most quickly of the digital investment platforms engaging with more money in a positive, non-patronizing way. Today, so many women's primary emotions are on money or shame and loneliness. But our research indicates that a key driver of a woman's confidence in achieving her future goals is whether they are actually investing and saving.
Thank you. Dr. Cook, you are now recognized for 5 minutes to give oral testimony on your presentation.
Chairwoman Beatty, Ranking Member Wagner, and eminent members of the subcommittee. Thank you for the opportunity to testify today about examining the racial and gender wealth gap in America. 11-to-1. From the Survey of Consumer Finances, this is the ratio of white median household net worth to black median household net worth. 31,000-to-1. From the Federal Reserve Bank of Boston, Sandy Darity, Derek Hamilton, and the co-authors in the Color of Wealth in Boston report, this is the ratio of white median household net worth to black median household net worth in Boston. 50-to-1. From the Census Annual Survey of Entrepreneurs, this is the number of white to black entrepreneurs in the United States. In a widely covered speech on income and wealth inequality in 2014, then Chair of the Federal Reserve, Janet Yellen, identified 4 pillars of opportunity, or building blocks for the gains in income and wealth that most Americans hope are within reach of those who strive for them. Resources available for children, including education, affordable higher education, business ownership, and inherited wealth. Given the data on entrepreneurship and net worth, it appears that the pathways to opportunity in America are blocked for many racial and ethnic minorities. What we know from American economic history and current data is that laws, policies, institutions, and practices that impede opportunity have emerged, and these are diminishing their expected outcomes. To quote the opening to Roosevelt Institute's 2016 report, Rewrite the Racial Rules, until economic and social rules work for all, they are not working. In the short time I have left, I would like to illustrate how this works through one of the critical inputs to economic growth, invention and innovation, the focus of my long-term research. Despite major gains in the 1970s, women and African Americans remain underrepresented in the innovation economy. Allow me to start with a few basic facts about the innovation economy. In 2014, the median innovation worker earned $81,000 compared to $36,000 for all workers. In general, innovation economy jobs are growing faster than in other sectors, and employment rates are lower. My research suggests that inequality exists at every stage in the innovation process for women and underrepresented minorities. That is, education, training, and commercialization of invention. I will review each in turn. Education. In 1970, 9% of PhDs in science and engineering fields were awarded to women, and by 2014, this was 41.6%. In 1970, 1% of all S&E PhDs went to African Americans. By 2014, the share that went to African Americans was 3.5%. The trends are similar for master's degrees and bachelor's degrees, and they're comparable through 2014. What is preventing participation in STEM fields? We have some clues. The recent research of economist Dania Francis suggests that black girls are disproportionately under-recommended for AP calculus classes by math teachers, which we know are the pathways to STEM careers. There's a lot more research that suggests that women and URM, underrepresented minorities, are interested in STEM, but are not consistently supported throughout their academic careers. The second stage in participating in the innovation economy is to be actively engaged in invention. Although participation has increased at this critical training stage, in 2015, white women made up only 18% of scientists and engineers working in science and engineering occupations, African American women 2%, and African American men 3%. Unemployment for underrepresented minority men at just above 4% is higher than for white and Asian men and higher than the average for all scientists and engineers. The unemployment rate for African American women is higher than the unemployment rate overall, nearly double that of all scientists and engineers. There are big divides with respect to patenting as well. The third and final stage is the one where wealth is accumulated. Finally, my co-author Yan Yan and I Yang and I calculated that U.S. GDP per capita could be 0.6% to 4.4% higher if more women and African Americans participated at the beginning of the innovation process.
Thank you, and thank you to all of the witnesses. I now yield myself 5 minutes for the first question. I'm going to try to get through several questions quickly. The first question will go to Dr. Cook, Ms. Krawcheck, and Mr. Asante Mohammed. Evidence shows that an additional way or pathway to building wealth is through investments and in securities. Yet Black families are less likely to own stock than white families, partly because Black families have fewer discretionary income with little or none to invest. Several of you mentioned my good friend Derek Hamilton and the baby bonds issue. So in 2014, President Obama established the MyRA program to help low and middle class income workers, regardless of color, who don't have access to, let's say, a 401k or a pension plan to start saving for retirement. In 2017, the Trump administration ended this program. So to the three of you, how could programs like MyRA or other federal saving programs help families invest comfortably to build a nest egg in the future?
I would just suggest that this program be reinstituted. It's not exactly my research, but I know the work of Derek Hamilton and Sandy Darity. I used to be Sandy Darity's research assistant, so I'm quite familiar with their research. But I would say that this is urgent because we're starting from so far back. If we're talking about Boston with a 30,000 to 1 net worth ratio, it is urgent that programs like this be reinstated.
And I would add that, I think definitely programs like MyRA should be reinstated. We see the greatest wealth inequality happening in later years, but I think also additional programs, as has mentioned, the Babies Bonds program that provides investment opportunities and finance opportunities for people and their young adult lives is also essential. And I'll just finally note that, and I do believe that the main challenge around investment for African American Latino families is not just lack of discretionary income, it's that deep asset poverty. If you're not a homeowner, it's kind of challenging to say, I want to go invest in stocks before you have even solidified your household, you're owning a house.
Thank you. Anything you want to add, Ms. Crawcheck?
Yes, I would agree with all that. I think more avenues to tax-deferred retirement savings are important. Taking care of the finances of the family, credit card debt, student loan debt, et cetera, which keep individuals from investing for retirement. What we're trying to do at Elevest for the private sector is keeping our minimums very low. High investment minimums by their nature really are sexist and racist at the end of the day, because if they're the ones who have the money and are able to overcome those high investment minimums, and working to keep it as plain English, intuitive as possible, as opposed to, it's about reaching one's goals as opposed to buying this mutual fund or that stock.
And let me say thank you. And earlier, we were having a conversation when we talk about disparities, and we were talking about algorithms. And it was quite interesting that I told the story as an African-American female when I stick my hands under the water fountain that is based on people being in trials. 9 out of 10 times the water does not come on, and somebody next to me would put their hands under there and the water would come on. And so when we talk about it, oftentimes people watching want to know, why do we always talk about race and ethnicity so much when we talk about disparities? And you finished the story for me. You want to say what you said quickly?
What we were talking about earlier is just as so much of medical research was done on a white male's heart attack, and just as crash dummies are built in the image of a male, in the investing industry, probably not surprisingly, is the industry has really been built by and for men. It is probably no surprise that so much about investing reminds you so much of sports.
Sure.
You know, buying low, selling high, et cetera.
Thank you. My last question, because the time is, and Mrs. Kijay Kazi and Ms. Powell, we have a lot of young people sitting in the audience today. And so when I think about the future and I think about debt, I can't help but thinking about the student loan debt. Can you share how that affects young people and millennials who should be included in wanting to have a prosperous future?
So debt definitely impacts the ability of a young person to accumulate wealth over their lifetime. African American students are more likely to incur debt, which means that they have to delay when they're going to purchase a home, which means that the rate at which they can accumulate equity in their home is slower than that of white students. It absolutely affects how they can move forward in terms of asset accumulation. So going back to baby bonds, if they had that kind of endowment at the beginning of their young adulthood, they would be able to invest in higher education without incurring as much, if any, debt, if that's the choice that they made for using their investment.
Thank you. My time is up, but Ms. Powell, we may be able to fit you in on someone else's question, but thank you. I now yield 5 minutes for questioning to the ranking member and my colleague, Congresswoman Wagner.
Thank you, Chairwoman Beatty. Studies have shown that when children are introduced to opportunities in different professions at a young age, they are more likely to enter those fields. Dr. Cook, because I know you've done research on this, I was stunned to hear about the under-recommended for AP courses that people of color and oftentimes young girls are seeing. What efforts are proactive companies undertaking to increase the number of women and minorities earning degrees in STEM programs, and what more can be done to increase that number, in your estimation?
Thank you for your question. I happen to be the director of the American Economic Association summer program. So economics is a STEM field, and they come to Michigan State University. This is supported by the National Science Foundation. This is intensive mentoring, and it is intensive in the sense that I tell them all the time, you belong here.
What age do you start?
So this is for undergraduates.
Okay.
All right, so this is to encourage underrepresented minorities to do PhDs in economics.
Okay.
And one thing that they've always been told many times throughout their educational career is that they don't belong there. They don't belong in higher level math classes. They don't belong in economics classes, in econometrics classes, in data science classes, in AI classes, for example. So a lot of this has to do with mentoring. So this is what I do in this 2-month-long course. And I think most programs that are similar to it have a similar focus. And they also focus on different pathways to these careers. One that I would suggest, in addition to my own, is going to the Lemelson Center at the National Museum of American History, to Spark Lab, where children can go through the steps. There are about 8 steps related to invention and innovation. So the last thing they do is develop innovation. So I think you're exactly right in terms of the beginning of your statement. The earlier the exposure, Raj Chetty has his work showing that, Raj Chetty and his co-authors have this work showing that children who are exposed to invention early have much better life outcomes, and they accumulate wealth. There are many outcomes that are better. So I think that that's perceptive.
Thank you. Diversity and inclusion are 2 distinct but equally important factors with respect to hiring and retaining a diverse workforce. Dr. Cook, research has shown that recruitment efforts are only effective for increasing overall diversity when the company's culture is such that women and minorities want to stay. What strategies have you seen as effective for creating a more inclusive workspace?
I'm glad you asked. So I think one of the biggest problems with respect to invention and innovation, if we're just talking about one
Right.
sector of the economy, is workplace climate. So you mentioned making workplaces more friendly for women. I interview entrepreneurs and tech firms every October, and one thing that I find is that women are kept out of a lot of the project management, a lot of the projects, because they have to go home and take care of children. For example, they have household duties. And the men on those teams tell me that they get punished. They see it and they get punished. It might be implicit, but they get punished for not being there. So changing workplace climate, I think, is critical.
Flexibility is absolutely key. Workplace flexibility without there being repercussions because of that. Now, I read your issue brief published in the Washington Center for Equitable Growth in July, and one topic that you discussed related to retention within STEM participation is the peer effects in doctoral STEM programs. You touched on it a little bit, and how these efforts can impact whether women graduate within 6 years or potentially leave after the first year of a PhD program. Can you elaborate briefly, we're gonna run out of time, on these efforts and how we can improve this retention?
So one key thing with respect to science and engineering programs, and I'll include economics in that, is that you can't just admit one woman, right, into each cohort, because what you do is allow them to be isolated. And if there are no women faculty, and that's true for many economics departments, you don't have the kind of mentorship or even role modeling that you need. So it's not only getting more in, it's getting them seen by others.
It goes back to the whole concept of not just diversity, but inclusion and acceptance. I've run out of time, and I have to run to the floor, Madam Chair, to give floor speech. I believe Mr. Gonzalez will be taking my seat, and then I will come back. I've got more questions. I yield back. Thank you all very, very much.
Thank you very much. The chair now recognizes the gentleman from Missouri, Congressman Clay, who is also the chair for the Subcommittee on Housing, Community Development, and Insurance. You are now recognized for 5 minutes.
Thank you, Madam Chair, and thank you for holding this hearing, and thank the panelists for your participation today. Let me start with Ms. Powell. I recently hosted a panel on the racial wealth gap. One of the panelists held the belief that we cannot discuss closing the wealth gap without acknowledging that middle and upper class black families have lost and are still losing wealth due to the segregation and denied benefits of African Americans. What do you think about that, and what are some solutions to amend these actions?
I see the racial and the gender wealth gaps as intricately interconnected. They have distinct components, but yet there are very similar structural causes that continue to exacerbate existing inequities. And so I feel that we can't talk about one without talking about the other. Women of color are experiencing both gaps. And actually, I argue that you cannot close the racial wealth gap unless you also close the gender wealth gap. Because women of color are more likely to be single, they're more likely to be raising the next generation. And so the two are intricately related.
Thank you. Mr. Muhammad, how do we close the racial wealth gap? What, in your opinion?
As mentioned, we helped produce a report called 10 Solutions to Bridge the Racial Wealth Divide. And I think, what's very helpful in looking at inequality in the frame of wealth is that wealth helps us see the kind of multifaceted aspect, that it's not just getting the person into the right education program, it's not just household composition, because with all of these things, we still see deep wealth inequality. And that's because, again, wealth is an economic indicator that kind of factors on over generations. So if we're going to address this issue, it's going to have to be a kind of a comprehensive program to deal with these issues. So things, as mentioned, like baby bonds, things like full employment. I think one of the most important things government can do is make sure there's good, adequate information and understanding our economic data in a racialized way.
One of the topics of discussion among the panelists and the audience, and I'm curious to understand your view, was of reparations and its role in closing the wealth gap. Do you have a view on reparations?
Yes, I do. I believe reparations for African Americans and separately reparations for Native Americans is essential. I think it's an important component of bridging racial wealth inequality, and it's an important component of this country moving forward in terms of racial justice. I will make a note, though, that I think in a very regressive economy like we have today, even with a strong reparations program, we still could have ongoing racial wealth inequality. We need reparations and comprehensive progressive policy to actually help make sure we have a more equity. Reparations alone won't do it, but it's definitely an essential step, I believe.
Thank you for that response. Dr. Cook, let me ask, what kind of solutions would you offer for closing the racial wealth gap? And does reparations, is that included in any of those equations?
So I haven't studied many of the proposals for reparations closely, but I agree with what my colleague, fellow witness, just said, that it can't be just money. It has to be reducing these barriers to participation in the economy. But one solution that I would suggest would be to augment CDFIs that are particularly focused on closing the racial wealth gap. For example, Rende Progress Capital in Grand Rapids, Michigan, is specifically focused on closing the racial wealth gap. So they look at projects that have positive externalities for the community. They are profit maximizing, but some of these would get overlooked by traditional credit committees when they were put forward. But this is a less than 2-year-old business, and I think that it has the right kind of focus on addressing the racial wealth gap, and I think there can be more of those. Those can be encouraged.
And with closing the home ownership gap, help families build equity and build investment.
Absolutely, but entrepreneurship is a pathway to inherited wealth. For example, home ownership, if we have the same conditions that we had pre-2008, I would not want home ownership. I'd want, well, okay, I wouldn't want business ownership either, but I'd try to address broadly the conditions that are associated with financial crises. But I would say that the path to inherited wealth is entrepreneurship, not just home ownership, because lots of African American families and Hispanic families lost their entire intergenerational wealth in one home.
Because they were steered into toxic mortgages.
Absolutely.
I'm through. Thank you.
Thank you. I now recognize the gentleman from Indiana, Congressman Hollingsworth, for 5 minutes.
Well, good afternoon. I'm excited to see such a great panel and really appreciate the chair and the majority holding this very important hearing. This is a discussion that needs to be ongoing. I know much research has been dedicated to this area and really appreciate the work that everybody on the panel has done and all the conversation thus far. I was having a debate with a far more intelligent friend of mine a few months ago, and he was chastising me and maybe chiding the whole system a little bit in that we, in public policy, too frequently ask the question of what's gone wrong instead of asking a more thoughtful question about what went right and individual cases where something went well for either an individual, a group of individuals, or the country overall. And his point is there's a lot of ways that things can go wrong, a lot of places where people can get stuck in an exit or an off-ramp from a pathway to success. But typically, a lot of things have to go right in order for an individual to break free and get to that success, get to their American dream. Kind of that old, Tolstoy principle that every happy families are all alike, but each unhappy family is unhappy in its own unique way. And his point was we should find what works and extrapolate from that and that microcosm, that smaller setting, instead of talking about grand, broad, sweeping policies that are based on research, based on theory, but might not pan out in practice. So I wondered if each of you might talk a little bit about a specific example, maybe a program, maybe a group or community that came together and was able to break through some of these barriers, was able to get people to success, because I, like you, share that passion and that crusade to make sure every American, no matter their zip code, no matter the color of their skin, has the opportunity to be able to hope for a brighter and better future. So I wonder if each of you might talk a little bit about that.
So I would say initiative that worked, children's savings accounts, which were proposed by Michael Sherrodden, and he really shifted our focus from just income to recognizing the importance of asset accumulation.
These have been implemented?
Yes,
Okay.
there was a demonstration of children's savings accounts, which demonstrated that low-income households, and this was, the test was with low-income households, do save and invest. The issue is that we cannot save our way out of the racial wealth gap because it was not created as a result of people not saving. It was created as a result of structural racism, discriminatory policies and practices.
Okay.
What we
what are
need-
some, reclaiming my time. So what are some of the examples? That's a great example. I appreciate you bringing that up. What are some other examples of practices that have worked and perhaps fully closed the gap or helped individuals get to a better place in their own lives?
So the proposal of baby bonds has not been tested, but
Correct.
has been analyzed, and the determination was that it would almost close the wealth gap.
Yeah, a lot of theories. Yeah, please, anybody.
Yes, sir. And so one thing that has historically, really moved millions of people forward and really created the white American middle class was the policies of the 40s and 50s that really created massive subsidies in home ownership, massive subsidies in education. And so we think, I think most of us who study racial wealth inequality recognize that disenfranchised minorities were not included in that massive initial investment. So we need that once again, but for the first time, to be inclusive. So I think that's a historic example of what can really move people forward and create a strong, secure economic security. I will also just put forward a more specific example. I've been in much conversation with the Association for Financial Planners, and one big challenge as we've seen is that most financial education as was mentioned by a colleague, has not been designed to really deal with the depth of racial wealth inequality. They make basic assumptions about middle income, high income, and assign a wealth value that blacks and Latinos, even with the same income, are never there. So we have seen some success in better being able to work with households of color by actually factoring in racial wealth inequality into their financial planning.
Ms. Karlczyk, I've been a big fan of your career and followed you closely and really appreciate some of the work that you have done, and especially with this new venture. I heard something that you said earlier, which I found very interesting, that high minimums are inherently racist and sexist. That's something I know this committee, and specifically the minority, has been really, really focused on, is how do we lower some of the regulatory burdens that hold firms to these higher levels of investment, because they're holding people back and keeping people out of the system that we otherwise want in the system. I know something that the ranking member, who I know had to step out, that she's been really passionate about is making sure that we have a thoughtful best interest policy coming out of the SEC so that we could enable and empower those with more moderate means to also get the advantages of a financial planner. So I appreciate the work that you've done in this area to ensure that everyone has a financial planner that they can help rely on, not just a robo-planner. Thank you so much.
Thank you.
Thank you. The chairwoman now recognizes the gentlewoman from Massachusetts, Congresswoman Presley, is now recognized for 5 minutes.
Thank you, Chairwoman. Thank to Chairwoman Waters for creating this subcommittee. Thank you, Chairwoman Beatty, for your continued leadership in this space. And thank you to all of those who have come here today, not only to testify, but for what you're doing each and every day. We are certainly grateful for your counsel and your expertise in your presentation today. And I apologize that I had to step out for a moment. I'm working with some restaurant workers to eliminate the sub-minimum wage, which in many ways, given who represents that workforce, contributes to the very issue we're discussing today. But over the past 4 decades, wealth and income inequality has skyrocketed. Nearly half of all wealth grown since 1986, as you well know, has gone to the top 1% of our households, while the top 1% controls 42% of the nation's wealth. The wealth held by the bottom 90% of Americans is rapidly shrinking. You've spoken about my district already, some of you in your testimony here today, the Massachusetts 7th Congressional District, which includes Boston, one of the most diverse and unequal districts in the nation. White households have a net worth of $247,500, while black households have a median net worth of just $8. Yes, you heard that correctly, and it always bears repeating because it is sobering and devastating confirmation of the work that we have to do. Now, none of this happens in a vacuum. This reality is as much an indictment of our inaction as it is the federal government's role in selectively facilitating the wealth building of some while actively excluding others. But we're not here today just to double down on the problem. We're here to be prescriptive and solution focused. And many of you have referenced the legislation that I've introduced in partnership, bicameral legislation with Senator Cory Booker, baby bonds. And so I just wanted to do a little bit of a deeper dive on that. There are some that would dismiss this baby bonds bill as another radical proposal. The legislation is simple. Upon birth, every child is given a seed savings account with annual contributions from the federal government until that child turns 18 and a stable 3% return. By their 18th birthday, children from the poorest families would receive up to $47,000. That's money towards tuition, a down payment on a home, or an investment in a small business. Again, some think this is radical. But in my district, where median household income drops by $50,000 in a 3-mile radius and life expectancy by 30 years, we do need to be doing something radical and bold to address that. So would anyone on the panel wish to speak more to the scale of our nation's wealth inequality and whether or not baby bonds are a measure proportionate to the problem?
So, given the inequitable policies that have caused the racial and gender wealth gaps and the magnitude that you indicated, you call it radical, I call it bold, solutions are needed. And baby bonds represent one of those bold solutions. You mentioned the data from Boston. That data was gathered by Derek Hamilton and Sandy Darity with the data collection effort that was funded by the Ford Foundation that I referenced. It's information like that that lets us know just how great this problem is and that there is a strong need to do something about that. And I know that Derek feels that the forming of your bill has improved his concept by adjusting annually the amount of that would be contributed to the endowment. So it is contributing to helping to, one, enlighten us about what's needed. We need additional data. I argue that additional data is important, and your bill would ask for the Comptroller General to gather more information about providing additional information on the wealth of families. And I think that's only beneficial.
Thank you. And Mr. Asante Muhammad, again, since we arrived here because of policy, the path forward is going to require policy. So in my remaining time here, do you mind just ticking off again the litany of legislative solutions that you're supportive of, because you did include baby bonds in that?
Yes, and I think, again, one of the most important things about the baby bonds proposal is that it sustained a long-term investment into households, because the racial wealth divide is so deep that unless it is 20 years or longer, having that type of investment won't deal with this massive effect of racial wealth inequality. But we also have things like a full employment with a high minimum wage, as you noted you're fighting for with restaurant workers. We also have noted Medicare for all, because medical cost is the #1 source for bankruptcy. We also, again, have collecting data and making sure that there's actually a racial wealth divide audit of our policies, because we can look at our policies and have an understanding of who it's going to benefit more and whether it's going to increase the racial wealth divide or bridge it. So
and H.R. 40 and Senator Warren's bill, you also support? Okay.
You know my 10 solutions better than I do. Yes,
okay.
ma'am.
All right. Thank you. I yield.
Thank you.
Thank you. The chairwoman now recognizes the gentleman from Wisconsin. Mr. Stowe is recognized for 5 minutes.
Thank you, Madam Chairwoman, and thank you for holding today's hearing on a critical topic. I want to dive in a little bit on the education side, if I can. I want to look at it from a couple of different angles, from college and PhD and K through 12. Dr. Cook, in your issue brief, you mainly discussed the relationship between low female and minority participation in STEM PhD programs, and these groups comparatively low rates of patents and inventions. While it's clearly an important area for us to focus on, I think there's many good paying jobs that require STEM skills that can be obtained with 2-year in college degrees, especially true in my home state of Wisconsin, where advanced manufacturing and skills trade jobs can secure workers a place in the middle class. Can you comment a little bit on what the role the two-year technical college education can play in addressing gender and minority disparities in STEM career participation?
Sure, I can say something about that. One thing that I want to stress is that while I was giving data on PhD attainment, that was just signaling. A lot of the jobs in the innovation economy require two-year degrees, and they require specialization. There are programs, as in Massachusetts at UMass Lowell, that focus on, say, advanced manufacturing, and those degrees are 2-year, 4-year, and so on. So we have to have a workforce that is adequately prepared, and sometimes that's not always a bachelor's degree. So we have to be prepared any way we can be prepared, but that Sputnik moment still has to come, no matter whether it's a 2-year degree or a 4-year degree or a 6-year degree or a 10-year degree.
Thank you. I'm going to go backwards in progression. I want to dive into K through 12 here just a little bit with you, if I can. And so I look at the legacy of discrimination, how that plays a role in young students' trajectory through school and into the workforce. Providing kids with this exposure into STEM education, informing them about the career opportunities that are there, and ultimately chipping away at some of the empirical data that we have in front of us that leaves a lot to be desired. As I look at this, I think there's a lot of kids that are locked into schools that don't provide them with the opportunities that can put them on that path to a better life. And in particular, I look at school choice and some of the innovative K through 12 programs that exist in the state of Wisconsin, and how school choice is giving, in particularly underrepresented minorities, an opportunity to obtain an education that's not locked into their specific zip code, giving them the opportunity to live out a broader American dream. Could you comment if any of your research is looked into school choice, in particular, as it would impact underrepresented minorities pursuing a career in the STEM field?
My research hasn't touched on that, but I know that the evidence is fairly mixed with respect to school choice. But there are a lot of things that can be done right now that don't involve sort of grand plans related to, say, school choice on that level. You know, if we just had lanes and stores where there weren't all of the cool toys, scientific toys associated with boys rather than with girls, all the pink things, you know, fluffy and uninteresting, and all the ones related to Star Trek related to boys, there's simple things that could be done, you know, or going to Spark Lab at the Lemelson Center at the Smithsonian. I mean, there are simple things that can be done that don't require much money. I mean, the next time you run into Party Center, ask someone why all the rockets are over there in the Boys Center.
Well, I'm not doubting that there's not a lot, and I think a lot of the things that we brought up here today, I think is actually really informative and helpful to think about. I do think that there could be additional research, in particular, as to the impact that school choice could have, in particular for underrepresented minorities to be able to obtain that early education, to get them on the track early. I've had the opportunity to see that firsthand in southeast Wisconsin, the community of Racine and other areas in our state, where I believe school choice is given individuals who are from areas where maybe their local school isn't the right fit for them, an opportunity and a helping hand up, and I think could be uniquely impactful. And so as we go forward, I hope that's an area we can continue to explore. I appreciate everybody being here. I appreciate the hearing, and I yield back.
Thank you. The chairwoman now recognizes the gentlewoman from North Carolina, Ms. Adams, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you for convening this hearing. It's a topic that we need to be talking about. I want to thank all the witnesses for being here. Many of us here have been shouting about fighting for and researching these issues for decades, and so having this conversation with this focus is long overdue. Let me just get right to my questions. Ms. Cook, what ways have local and federal policy created the racial and gender wealth gaps, and what are some of your proposed solutions? Ms. Cook.
So certainly the I can give one example with respect to federal policy. The destruction, intentional destruction of black neighborhoods with revitalization cannot be understated. One of the things that we know about patent teams, and I'll get to my argument quickly, this won't take long. The highest number, the peak year for patenting for African Americans was 1899. There is still a median size of a patent team with African Americans on it of 1. What you did was to break all of these social networks that African Americans had. These were independent inventors. They interacted with inventors. And what you did with revitalization, or what happened with revitalization, was that these communities were further separated from businesses, from economic activity. So that's one policy. African Americans not being able to take full advantage of the GI Bill. That's another policy. These are broad policies, but they're everywhere. They're not in just one place. Were you asking me for recommendations? I'm sorry, or were you asking me just to name some of those policies?
Well, recommendations.
Okay, recommendations. Okay, so I mentioned CDFIs, but also, again, this is from my research, the SBIR and the STTR programs have been effective in bringing new invention and innovation to the fore. That's something that can be pushed more, and there can be more outreach and engagement with respect to women. I thank you all for passing the Success Act, which was based on my research from my reading of it, and the IDEA Act is before you now. Those can encourage innovation by women and underrepresented minorities simply by counting them. That's an important part of it. And I would say that more support for programs like my own, the American Economic Association summer program, that provide mentoring and provide training with respect to STEM fields, I think would be very useful, but that's long term.
Thank you very much. Ms. Krawczyk, what, in your opinion, on the current corporate efforts, what is your opinion, excuse me, on the current corporate efforts towards closing their own gender pay gaps? We know that there's not a lot of transparency there. I'm curious about what you think.
Well, the research tells us that the gender pay gaps are decades away from closing for white women, 100+ years for black women, and 200+ years for Latinx women, which is very little progress. Companies today tend to double down on what they've been doing in order to close it. Active inertia, in which they just do the things they've been doing that haven't been working and just continue to do more of it. Where it's been successful are where CEOs like a Mark Benioff at Salesforce have simply decided to close the gender pay gap and have just done it.
Okay. So does any other witness have a solution for encouraging companies to become more transparent about racial and gender compensation data? Because, you know, oftentimes they don't know what that is.
I think transparency in wages and salary is absolutely essential for closing all of these gaps. People often don't know how much the person sitting next to them doing the same job is earning. I think people should be able to freely discuss their pay with each other. I think that the average pay for workers by gender and by race and ethnicity at certain categories should be publicly available, not by individual names necessarily, but by categories, so that people have a better sense of where they fall along the continuum. But that transparency is absolutely essential.
Okay. Does anyone else want to offer something?
I'll just put forward, I think, you know, companies need to boldly name these challenges. JP Morgan Chase recently created the Advancing Black Pathways program that's focused on a multitude of levels of, one, having much more clear data on how African Americans are doing in their company, doing mentorship, doing a direct outreach. So I think those type of bold policy programs is required in the corporate sector.
Thank you very much, Madam Chair. I'm going to yield back. I'm out of time.
Thank you. The chairwoman now recognizes the gentleman from Ohio. Mr. Gonzalez, you are now recognized for 5 minutes.
Thank you, Madam Chair, for leading this important hearing, and thank you, everybody, for your participation. The data is clear and overwhelming, and I, for one, am thrilled that we're starting to have serious conversations about what the drivers are, and how we can fix this. We may have different answers ultimately, but the fact that the conversations are taking place in a serious manner, I think, are really important. And so I just want to thank you all for all your contributions today and in general. One area that I like to focus on with respect to wealth inequality is borrowing costs and lending costs. The reality is if you're borrowing at a 5% rate, 4% rate, 3% rate, compounding capital and building wealth can occur if you are disconnected from that environment. It can be awfully difficult if your rates are 10, 20, 100%. Warren Buffett can't build wealth that way. So I guess with that, I'll start with Dr. Pyle. Specifically in your testimony, you discuss how women are more likely to receive high-cost loans, such as subprime home loans. How could the use of financial technology help address this problem by providing more access to credit? And I know we have some issues there too, but I just want to talk about the opportunity.
I think given appropriate financial information and education, women are extremely savvy financial decision makers. I think that they were unfairly targeted and at the same levels of credit score and repayment ability, they were targeted with much higher interest rates. And this really undercut their ability to build wealth. I think there are a lot of opportunities out there for products and for services for women to really help close that gap. And I think it's absolutely, absolutely essential because wealth is not just about how much you're earning in terms of interest. It's how much you're not paying in these other types of fees and interest rates. So I feel that women are really savvy, but they need a little bit more information and a little bit more transparency in the products that are being offered to them.
Great, and I think that's one of the great promises about technology. Technology, I think, people ascribe value to it. I think it's value neutral. It depends how you apply it. And in this instance, I think it creates some really exciting opportunities. Dr. Cook, in your report, you discuss how mentorships can be a valuable tool for retention within the STEM fields. Can you give some specific examples? Kind of Trey's, representing Hollingworth's question earlier, what specific examples have you seen that have worked really well?
One example that comes up in my research is that of James West at AT&T. Mm-hmm. He mentored at least 2 generations of PhD students who were at AT&T, and AT&T used to have one of the most sweeping programs for PhD students, for undergraduate and PhD students, promoting equity. So lots of women, lots of underrepresented minorities. And he had a distinguished career of invention, and including those students on patent teams, for example. So this is where a lot of women and underrepresented minorities get excluded. My research shows that single-sex teams are less productive than co-ed teams, patent teams. So we're leaving a lot of money on the table if we either have single-sex male or single-sex female patent teams. So that's a sort of concrete way in which there can be changes made in patenting.
Makes a lot of sense. Thank you for sharing that. And then Dr. Pyle, I was looking through your testimony, and you provide the mean and median wealth for couples, single men and single women. And there's obviously a huge gap between single male and single female, $10,000 in median wealth versus $3,200. What I believe is that the bigger gap, or the one that I really wish we could solve, is the couples one. So the couple's $78,000. And when I say that, what I mean is this. I believe one of the main drivers to a lot of the problems we have in our society today is the breakdown of the family. I think we've seen that within ethnic minorities, but also across the entire society. And we know, and this is why I think this is so important, we know that one of the biggest drivers to family breakdown is financial stress. And so if we get this right, and we find ways to be more inclusive in the financial system, my hope is that what we will see is a world where we have more families forming and staying together. Because it's my belief that if we truly want to rebuild this country, we have to rebuild our families. And with that, I yield back.
Thank you. The chairwoman now recognizes the gentlewoman from Texas, Ms. Garcia. You are now recognized for 5 minutes.
Thank you, Madam Chair, and thank you for holding this hearing on such an important topic to many of us, and it's not just to some of us that may be women or may be minorities, but really it does impact all of us, and more importantly to the nation's economy. I want to thank all the panel members today, and quite frankly, Madam Chair, I don't know about you, but I'm still trying to let the last statement that Ms. Is it Krawcheck? Made 200 years. It'll take Latinas 200 years to catch up. You said African American 100. I mean, Madam Chair, I don't think we're going to be around to make any of those rewards or gains or whatever that might be, because it's just I'm just completely astounded by that. I mean, I knew it was bad, but quite frankly, until you see numbers, you really don't get the message about how bad it is. And I know there seems to be sometimes a narrative that, well, it's all individual choice. If the individual just took responsibility, if they just decided to do what they could. But the reality is that even though we can say that we should make opportunities so that no one, no matter what their zip code, that they can achieve, the reality is that your zip code makes a big difference, doesn't it? Because what we're faced with is not something that can come overnight or that one law or two laws can pass and we fix it. It's the infrastructure. It's all of the things together that have existed, not just today, but many years ago and have been building and building. So I'm just somewhat perplexed trying to figure out of all the things all of you have mentioned, because all those are great policy interventions. But we've done some of that already. And in Texas, we have this saying that you can take the horse to the water, but you can't make the horse drink the water. So my question to you is, which of these policies can we get that horse to drink the water? Not only to see that there's a CRA and there's housing incentives, that there's equal pay for equal work. How do we get that damn horse to drink the water and really get engaged and buy in? And quickly, everybody, I'll give you, I think we have maybe like less than a minute for each of you.
Thank you. I think that it takes a package of policies to dismantle the structural racism that exists. So it's not just one policy, and perhaps it didn't work because one policy was tried at a time, but the combination or a package of change policies that are intended to change.
Great. Mr. Mohammed?
Yes, and to take your analogy, I mean, I don't think the issue so much, I'm not exactly sure who's the horse and what's the water, but I don't think so much the analogy is that the horse isn't taking the water, meaning communities of color aren't willing to take the investments needed to actually create a stable middle-class economy for themselves. It's that the country has never provided water to these communities, that would allow this type of stability. And so again, for the first time, we have to do a massive middle-class investment that was done for white America in the 30s, 40s, and 50s, but has never been done for disenfranchised minorities.
Okay, Ms. Pyle?
So I took the horse and water analogy a little bit differently, talking about how leaders could come together and drink the water.
And the institutions, the banks can really embrace and take ownership and really do something with the Reinvestment Act. Housing developers can really take the housing incentives and other tools to really build in communities for lower affordable housing, et cetera. We can put it there, but they may not do it.
So I think
they don't do it.
What we have to realize is that these are not just policies that benefit a small subset of the population. These are policies and these are actions that will benefit the entire nation. So if there's a community in the nation that's not living up to its full potential because they're being denied opportunities in STEM or in the labor market, for example, or if they're being denied housing because of discriminatory policies, that impacts not just that particular person or that particular community. It really impacts our entire nation, our entire ability to grow economically. So I think that we're very short-sighted when we think about these types of policies as benefiting only a small subgroup rather than the nation as a whole.
Agreed. Ms. Crouchett?
I'd like to add one very quickly that we haven't talked about today, and coming at it from a private sector perspective. If there were one thing I could change, it would be to have a mandated paid parental leave. That where we see the gender pay gap really kick in is women begin to have babies. And this is despite the research that just a minority of companies in this country have this type of paid leave, despite the research that shows us that it is not an expense, it's an investment that pays for itself in less than a year, because if a woman and her family are allowed to bond and come together in those early days, weeks, and months, she's more likely to return to work. The company, therefore, doesn't have to find a replacement and pay for it and train that replacement. So we could do one, if I could do one thing, that's what it would be.
Ms. Cook, quickly, because I might run out of time, and I'm working on the chair's indulgence at this moment.
Okay, so I'd make one quick, narrow suggestion. Private universities can't or don't reveal their data like public universities have to. All of them have 501c3 status or for whatever, they're nonprofits.
Or at least a foundation.
Right, and they receive federal funding. So if they don't supply these data, so we can talk about voluntarily doing this, but those are huge universities, and they have a lot of influence, and this affects the entire stream that we're talking about, the entire innovative process, the financial literacy, financial education. Those universities should be made to make their wage data public as well.
Thank you, and thank you, Madam Chair.
Thank you, and thank you. And thank you to all of our witnesses today for your testimony, Ms. Kijay Kazi, Mr. Asante Mohammed, Ms. Powell, Ms. Krawcheck, and Dr. Cook. First, I'd like to say that I have several articles that, without objection, I'd like to enter into the record. Without objection, all members will also have 5 legislative days within which to submit additional written questions for the witnesses to the committee, which will be forwarded to the witnesses for your response. I'd like to ask the witnesses to please respond as promptly as you are able to the questions. Without objections, all members will have 5 legislative days within which to submit extraneous materials to the committee for inclusion in the record. This hearing is now adjourned.